One of the wildest fights that we've ever seen online is currently happening. Trump versus Elon, and it's spilling over into the stock market with over 14% down in just one session on Tesla, and it's smashed into put support. But is this starting to affect other assets? Bitcoin fell through and silver is going absolutely ballistic. And as we've mentioned for the last 2 months, we thought that we might be in for a squeeze. So what exactly is happening, and are we at the calm before the storm? Well, according to the VIX structure right now, something weird is happening before this Friday's non-farm payroll. In today's video, we'll break it all down together as we cover stocks, commodities, and cryptos. This one's not to be missed, guys. Let's get into it right now. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss. What exactly is going on with Tesla right now and Elon and Trump, and of course, some of the squeezes that we've started to see appear, along with the volatility in the VIX. There's something weird going on into this Friday's results. Just a quick piece of housekeeping. Thank you so much for bearing with me over the last 2 days. We were running a seminar here in Australia, and of course, we're now back full time. So thank you so much, guys, for watching the videos, supporting the channel, and obviously we've got a lot to talk about as we catch up on some of these events. Let's first start off, though, with this Elon versus Trump saga and how it played out over the session. The first post, Trump, I'm very disappointed in Elon. And then Musk came back, without me, Trump would not have won the election. And then he said after that, such ingratitude. This, of course, got everyone really fired up. On top of that, then we saw Trump say, I asked him to leave and he just went crazy. And then Musk said, such an obvious lie, so sad. And all of this basically had a massive effect here on the stock price throughout the session as we saw shorting and shorting and shorting go through. We did have a private stream for the open, and I suggested that we might have been heading towards 300 or maybe 280 over the next coming sessions, maybe 300 in that session and 280 in the next one. But I tell you what, it went faster than anybody expected. And it got even worse than this, of course, if you want to go check it out. There is a whole bunch of drama going on over on X right now. But what we're probably more interested in is where are the flows, are there opportunities in this madness that's going on right now? Well, of course, it comes back to where are the options? And we've known for a long time that 300 and 280, 275 probably marks out the largest level of overall options in this stock. And of course, 275 is now the 0 DTE level, and the general put support seems to be around 280. So is this the bottom for Tesla? Well, we did see the market start to pick up this area, and now, of course, we look for structure. And we'll look at the stock a little bit later on in today's video so that we can see whether we do have structure around these points. But the next 24 hours, as you can see here, the options market is expecting a large move. Almost 300 on the top side and around 270 on the bottom. So basically, implied volatility is high for this stock, as I'm sure we're going to continue to see a lot of out of market tweets, or whatever we call them now, X posts and everything else. To make matters even more wild, we have 2 big events coming. Of course, we saw that Trump and Z had a potential phone call, and that may also start to lead into the weekend. The markets did react off that, going up about 0.4% on the S&P 500 before pulling back into that area. But the structure on the VIX is doing something very strange into non-farm payrolls. Now, we've seen this quite a few times, but I'll just explain it to you guys so you can get a bit of an idea. So this is what we call the VIX going into fully backward dated, which basically means that the short-term volatility is much higher overall than the long-term. This is signaling a market concern in the near-term risks. I wonder what that could be. It's got to be these jobs numbers, and we've got an interesting precursor to that in a moment. And of course, this is now pretty extreme. So basically, we don't see it very often. When it does occur, it means that that piece of news matters more than normal. And I liken it to really when we see those earnings results. Of course, on the channel here, and if it's your first time here, make sure to subscribe. During earnings season, we provide the options volatility. Sometimes on a stock like Nvidia, it could be as much as plus or minus 8%. And basically, we see the stock move in that area. Generally, the options will imply that that is generally the expectation and that markets will move around 8%, 68% of the time. Now, this is the same type of thing that can happen into economic events. And according to at least the market, they do care about this non-farm payroll result more so than usual. So expect volatility and potentially some large moves. Remember, non-farm payrolls comes out 1 hour before the New York market open. It could be a bonanza. of opportunity. Often non-farms is well known to go in one direction and then split and go into the other one. So again, it can be a bit trappy. Now let's talk about, of course, one of my favorite metals and maybe our favorite metals on the channel for a little bit here, which has been a slow burn, no doubt. So we've been talking about this for 1.5, 2 months, which has been, of course, silver starting to play the catch-up game. Now, it just broke to a massive high, which we haven't seen since 2012. So, of course, silver is on its run. And what tends to happen is we see gold rallying first, which, of course, it's done, and silver can be the catch-up metal. Remember, we have basically 3 pillars of geopolitical risk kind of hedging at the moment. We've got gold, the traditional asset, silver, again, a partially traditional asset, and then also Bitcoin. And what we noticed about a month ago is gold was signaling that Bitcoin should go. Bitcoin then went. Then we saw silver fall to historically low levels in comparison to gold. And then now suddenly silver is going. We've also seen silver junior miners. These are, of course, stocks, and gold miners as well, juniors in particular, going ballistic. And if you're looking at it, junior miners relative to silver ratio, boy, oh boy, are they cheap. Now, the thing about stocks, in particular gold or silver miners, is they often sell their bullion for cheap rates in the future. So you can't just say, oh, this chart's fantastic, let's go buy it. But it is still an interesting breakout here of the downward trend line. And this is, of course, from Tabby Costa. And I always like, the work that he does in terms of the gold, silver stuff. Most buying by central banks undeclared. Yes, we already agree with this. Of course, silver is being purchased by some central banks. Gold, we've long detailed the purchasing, especially since 2022, by particularly China and India and Russia. They've all been purchasing massive amounts of gold over the last couple of years, as I think we're in a currency war. So basically, this is a point where people go traditionally to gold, try to build giant amounts of holdings, and then potentially float a new major currency and try to get that done across the world. Remember, whoever has the major currency generally controls the financial systems in particular. Global gold production, one of the reasons we've liked gold for quite a while, especially the last couple of years, has been that no one's producing at faster levels. It's stagnant, it's flat. We're not seeing an oversupply, we're seeing an over demand. So that, of course, when demand is higher than supply, things tend to go up. Now let's talk about some stupid numbers. And of course, one of those is the GDP from the Atlanta Fed. Now, a lot of people have been worried about the GDP going bad and, of course, us falling into a recession straight away. And I actually polled you guys over the next 12 months, and I think 57% of you responded that you thought that the US would enter a recession in the next 12 months. Could be right. And then, of course, the rest of you said it wouldn't. But that's pretty close. It's almost 50-50. Now, generally speaking, the Atlanta Fed obviously had the GDP number going down, big time. And then now it's starting to pick back up. But could that still be completely wrong? Have a look here at the latest Challenger job cuts, January to May, over 2018 to 2025. Now, you may notice something a little bit disturbing about the current job cuts this year. Job cuts are surging in 2025 through to May as US employers have announced 696,309 layoffs. Now, obviously, there are hires coming in as well, but that's up 80% versus the same time last year. Now, this is just 65,000 away from surpassing all of 2024's total cuts. So we are in the first half of the year, not even, and we've already seen more job cuts this year starting to come through. And of course, we haven't seen that in non-farm payrolls. We're still seeing jobs coming on each month, and it's expected to be another positive one. But this is still potentially a bit of a warning sign. Remember, of course, this is an outlier thanks to the pandemic, but the one over here, I'm telling you what, that is a pretty large number, and we will be tracking that on the channel as much as we can. In terms of flows from foreign kind of money coming into the US, we are starting to see it pick back up as the markets recover and people look for areas to potentially make money. Of course, that hit a peak in January as everyone was speculating from overseas on the new presidency. It dropped off, and now it's kind of started to pick back up. So I guess that's a good thing for flows. But I think the GDP component, most of it, the best thing about it right now has to be AI. So we're seeing AI giving a massive boom to the US economy at the moment. And this is where a lot of the pickups are happening in these GDP revisions. And you can see here that this is now the largest expected contribution record and also record ever in terms of actual real US economy growth. And it's even bigger than the dot-com boom. So I think interestingly here, though, just before the dot-com boom blew up, we saw very similar reads. What's that mean? Oh, we'll have to keep tracking that one as well. But yeah, anyway, AI certainly contributing. And if we're taking a look at the bubbles, as you guys can see here, all the great bubbles in time, the Magnificent Seven obviously is up there with some of the biggest ones, especially, very correspondent to the internet bubble. Although this time, of course, these companies actually have real earnings versus none. Now, what about the next month? Well, the next month actually looks pretty decent. And that's because we had a fairly good May. Traditionally, the market will be bullish, well, at least in every similar circumstance when you're overlaying a lot of charts, the markets generally will be bullish in the month of June. And more importantly, the markets will generally be bullish more so in small caps. And we'll explain that in our next video on the weekend. So make sure to subscribe. We've got a cool chart there. It's also already posted over on our X account. Links in the description down below if you want to see it first. But yeah, there are some very interesting stats here for the Russell. And as you'll find out later on today's video, we do have a big break level to look at. First 100 days and beyond, this chart is one of the ones we're tracking this year because we're interested to see how this is going to play out. Could there be a stumble between day 200 and 250? We're, of course, starting to approach that. And we've often seen some of the bigger falls at the start of the year in terms of new presidencies end in this area and end up in a recession. And of course, the other one we're tracking is the 1990s narrative. Which one of these are we in? Are we in the 96, which a lot of people think, or are we more in this one over here, which is what I think we're more likely in, these back end ones in terms of, yes, the markets look good. Yes, everything looks fantastic. Yes, everyone's piling in, but leverage is increasing. Now let's move over to dark pools. Couple of new dark pools, guys. The largest trade ever on Hood just came through. That's a big one. So that comes in right at the peak. We obviously saw some big ones on Palantir. So far, the market has actually sold from that large one, third largest. We had the largest on Netflix. Third largest. We had the largest on Netflix. And of course, we've seen a huge cluster through Bitcoin. I think the real cluster here on Bitcoin has to do with those options that we've shown recently. Here's the Netflix number one. And in terms of any new ones, not really. But of course, we do know what these large two Tesla trades were on the 2x lever. They were profits. Why? Because, of course, since that point, what have we seen? We've seen Tesla absolutely nosedive back down into this level. And yeah, that was certainly a bit weird. And then when this low got taken out, yeah, the most likely scenario was a 300, 280. And that's where we find ourselves. How did we get there? We didn't know it was going to be Elon and Trump having a bit of a fight on X and Truth Social, but that's anyway where we are. Now, options opens, you can see here, interest, all-time highs. Option levels were obviously at these extreme levels, usually during a consolidation period for Bitcoin. So that could suggest that we're at that consolidation now. And I don't know if it's anything to be too concerned about unless the rest of the market falls off. And best market sectors last couple of days, metals, and actually semiconductors, but mostly metals because silver went ballistic, copper did really well, and consumer discretionary, if you're wondering why that's down, that's because Tesla is such a huge component of it. And you can see here the punishment that went through that particular sector over the last 24 hours. A lot of calm before the storm, almost no moves across the market, except for Tesla just going down through the session. Liquidity from central banks slightly improving, though still below where they were in April. So obviously we're still watching that. The S&P 500 coming off the 6,000 core wall. This is that massive, most traded zone level. If the markets do fail here, just remember, guys, the likelihood is that we'll move down to a 5,660, 5,600, fill some of the gaps down here. And the key level to watch is 5,750 for the buyers. And of course, if you're looking at the smaller time frames, such as this futures, you can see here the high low for the next 24 hours, the fact that the market's still in a series of higher highs and higher lows, although it is showing signs of at least some overbought tendencies. It's hard to go against a market that is showing a series of higher highs and higher lows. So there's no sign yet of weakness. Some key levels to be watching, 58.40 on the futures. If it blows below that, you could argue this is like a little double top within it. Then, of course, that would go down to 57.50. And if it breaks that, I think we're going 56s, maybe even a 55. From the top end, if we break 6,000, I think we're going for a new all-time high, which is not that much to expect at that point. Let's have a look at the options flowing into the Friday session, the non-farm payroll session. You can see an absolute massive amount of calls at 60, 50, and 6,000. And in terms of puts, we've got 58.50 being the most put level over really the next kind of 24 hours, and 57.50. That's really just each 50 points. And if it keeps falling off, you can see here the June OPEX, we've got 5,700. So we'll keep updating that one. I think the more interesting options, though, are probably Tesla. Tesla is stacked at 275. So everyone's gone bearish, 275, 280 in terms of puts. That creates a massive put wall. Unless things really escalate, you've got to kind of think that the market's going to try to hold that level, at least based on the options themselves. And these poor 940, 950 calls, yeah, they're looking even worse. We've kind of laughed at those for a while together, but I'm still laughing at them. I don't know who that is and what they're doing, but anyway, they're keeping it open. They're living the dream, and I don't know if they're going to get their 900 dream anymore now that there's a Twitter fight going on. Nvidia 135 on the put wall and 140 on the call wall. We are currently at 140, although the price action has looked better. Let's jump into the price action. We'll start here with the VIX. So although the VIX looks pretty calm, obviously we saw that backward dated, which basically means that there is a very large VIX spike over the next couple of sessions. And that's, of course, that non-farm payrolls. So whenever you're looking at a VIX like this, remember it is not based on the really short timeframes. It's based on the expectation in the future as well. And yeah, it's not showing any signs of massive spikes yet, but the next 24 hours will be the important thing to watch. US 30-year fallen down, so we're not worried about that 5% at this stage, 4.881. So obviously no concerns there from the major bond markets. And home builders, one of the things we track, kind of just staying, around the same levels. I don't like what happened to home builders. I see it as an early warning sign. We've been talking a little bit more about property on the channel. Always interested to know whether you guys are interested for us to track US property, as I do think it's a huge part of where we are currently in the markets, and it all impacts together. As we've always said, the bonds market, the currency markets, the real estate market, and of course, crypto and everything else, including stocks, they've all got a part to play in the financial system. So it's important to watch all of them. Home builders, though, you can see here is kind of stagnant. So nothing really worrying there. The US dollar, though, is waiting for non-farm payrolls. You can tell because this is a weekly. You can see this big rejection wick, and you can see the pressure that it's putting on that 98.80 zone. So basically, if it falls below here, there's nothing stopping it between 95.50 and 96, which could mean big things for, of course, some of our favorite metals. One of those being gold. Gold is going up, sure, but it is slower than the other one. Let's have a look here. I'm going to actually load up silver gold for a minute so you can see. Look at that breakout for silver gold. It's been a while coming, guys. We first, of course, started crapping on about silver gold over here in particular, and obviously we've talked about the ratio for a while. I went super bullish in this area here, and so far, so good for silver against gold, and more importantly, the actual silver breakout itself. Have a look at this thing. It's 36 at the time of this recording, and it dropped some of these big levels. Nice, beautiful coil, big breakout so far. Weekly close will matter, and of course, like anything, silver bugs in particular, not that I am one, but of course we like silver right now. They've been disappointed a lot of times since 2012. The amount of excitement over the years that we've all seen through silver traders has been high, and it's often failed to meet those expectations. So like any trade, like any investment, like anything you're doing, you've got to risk manage it. You've got to make sure you're aware of those situations. Now, has silver done something it hasn't done in a while? Yes, it's moved at an incredible rate, and this is getting on one of the faster rates it's moved for a long time. 9% this week alone. Big sessions, big breaks, big weekly close. Looking forward to coming at you on the weekend so we can talk about that some more. But so far, so good in terms of bullishness. Let's have a look at Tesla. Wow, big fall. As soon as it dropped this level, it was pretty much over for this stock. We talked about this before. We were a little bit shaky on this. Obviously, the trend is the trend and it is what it is. But everybody was turning bullish, as we mentioned. And although there were a lot of calls here, it wasn't able to sustain a few sessions above. It fell down and then it fell through. And luckily, it took the low during the previous session before this whole X thing started to happen. But you can see here, it pushed lower, went down to 300, smashed that through, sat there for the intraday a little bit, and then went straight down to 280, 275. And this basically is where the put support is. So for now, all Tesla traders will want to see this hold. but I'd say maybe, I don't know. I don't think they're going to come to terms anytime soon. What do you guys think in the comments? Do you think this is going to continue to blow up next week? It's certainly a wild thing. I mean, people are posting about it. It's getting like 10 million views or 50 million views or imprints or whatever you want to say on X. It's pretty wild stuff. Let's have a look through Nvidia. What's going on over there? We have a break here of 140, then it couldn't hold it. And we obviously are looking for weekly closes in particular. So far, not too bad. I mean, it's not good that it didn't hold above these rejection wicks over here for Nvidia, but yeah, it's still just grinding up. And semis going well is never a bad thing for the US economy. As we saw, AI is delivering the GDP growth. That's the number one deliverable right now. So this is what the market will be looking for, to continuously move higher. Even if the valuations are stupid and you don't agree with them, it doesn't really matter. The main point is if the flow is high, then you've just got to kind of go with it. So we still think pullbacks will be met by the street at this stage on markets. US oil, 64. What a level. It's going to be a big zone to break out of. Currently coiling. Don't mind the small time frames. I've been talking about this a little bit. And for the first time, I can say, well, oil looks like it's poised to try to go towards 70 a barrel. However, it needs to break and close above 64. And it is a geopolitical risk trade. So be very careful. We haven't liked oil in 25 because we know it's the geopolitical risk. It's the big one there. What about Google? Still hovering, still looking okay. We've seen some other stocks as well that have been beaten around a little bit, like AMD and stuff, just kind of holding around these levels, ready for breakouts. A lot of potential breakouts on this market. Metals have been the winner though. Copper in particular, and we'll look at that in just a second. Let's have a look at Chinese market. It's been moving up with the metals. 3 amazing sessions back to the highs. Flows are good. Basically, China's stimulating the economy pretty hard. And you can see here on the weekly, that'd be a pretty nice close and maybe suggest we're going towards a new high. So China is moving ahead here a little bit over the last couple of sessions. Speaking of copper, let's take a quick look here. You can see that copper is breaking out, or trying to. Did reject a little bit back down from how high it was during the session. But again, weekly close will be important on this, and metals are improving, guys. So that's a good thing. Uranium, particularly, something we've been looking at in our private community. Links in the description down below. It's been doing quite nicely. It's like a pseudo AI play for people that want to be more in the defensive, utility space. So it's an interesting one. Now, we mentioned before that the Russell could do well in June, special on that in the weekend. But the main thing here is this level. Notice it's at resistance before non-farm payrolls. This is what always happens. Markets will go to a point of equilibrium and news is used as the excuse to push it through. Next stop, if it does go higher, 225, maybe. I mean, it looks pretty good, and inverse head and shoulders would say even more. So Russell, it's been lagging for a while. Could it improve? Certainly could. NASDAQ, you can see here, series of higher highs and higher lows. No break towards the downside yet. No real signs of that yet or anything. I mean, it is what it is. This is a big rejection candle. You could argue there's some overbought aspects of this market, but non-farms will ultimately be the decider. And for now, the 20 moving average on the daily has been kind of the support. So again, that would sit at 21, 180, 200 level for the next 24 hours. What about Bitcoin? It definitely fell through, but it only just marred the low here of 100,800. If it now regains past 107, I'd say it's bullish to a new high. So that's going to be a level we'll look at, and we'll obviously mark that out. If you're looking at buying the dip, though, I think that you'd have to be considering this 95,000 down here, because realistically, this is a bit speculative now that we've dropped the low. We need to see a nice V shape, a nice actual bounce of bidders. And if non-farms comes in and pushes this market down, then of course, it's going to be a little bit worse. Speaking of non-farms, what is the number? Well, the number is 127,000. It was 130, but it's actually dropped a little bit as I guess a few economists have switched their numbers around. In general, look, anything under 100K is obviously considered weakening market. This is a lagging number, but people are looking at it to see whether tariffs are taking any toll. And that is going to be the big discussion point, I'm sure, over the next coming weeks, months, etc. Has the US economy started to falter due to tariffs being implemented? So at the moment, still expected to be pretty strong. Don't pay too much attention to the number. Don't try to interpret it too much. Instead, look at the flows. Look at how the market's moving. If it breaks through 6,000 and holds it and closes, then it's probably going to move to the next level of equilibrium, which we'll update on. If it breaks, of course, below 58.50 and we start seeing that pressured, then we'll move towards 57.50 generally, and then 56s in terms of technicals. The key to non-farms is always to not really care too much about the number and instead focus on the price action and the flows. That generally makes it better. Also, the first half an hour to 45 minutes of move can often be false, and I'm sure a lot of you can confirm that in the comments down below. Guys, thank you so much for bearing with us over the last 2 days. We much appreciate it. I certainly do appreciate it. It's been hard because we've been traveling around, but we're back, and it's great to have you here. And of course, what a 24 hours for silver. I mean, wow, it was really spectacular week. I've been waiting for this one. I'm sure a few of you have been. Been a bit frustrating, but that's the way it is. And of course, Tesla, wow, that is going to be an evolving situation. It's like a soap opera, guys. It's absolutely wild, and we'll see how it plays out. Thank you so much for being with us. Subscribe, smash the bell icon, and we'll see you in the next one. Bye for now.